help me understand some of the trends you've seen in the past few years.
Okay, thank you very much for that question. So pensions funds are critical to developing our continent. And then across the continent, you can realize that a lot of governments are moving from the state-run pensions to what we call private pensions. Now, the whole idea is to ensure that we have pension funds growing. Now, you realize that with the onboard of private pensions from East Africa to West Africa to Southern Africa, where we even have private pensions more developed, you have a lot of monies available.
Yeah.
Now, what does this do? This helps us to deepen our money markets. This helps us deepen our markets and also allows governments a lot of money to do a lot of infrastructure. So you realize that in certain part of Africa where you have private pensions picking up, you have pension funds growing astronomically just because of what we call compound interest, because the funds are getting matured and you have them growing in leaps and in bounds. So this provides a base for government to have a lot of money to do a lot of infrastructural development. So this is key in transforming the African continent if it's handled well.
Let's take a look at the markets. Countries like Nigeria, South Africa, Ghana are up there in terms of these funds. Help me understand how the trends have been if we looked alone in the past year.
Okay, so I can give you a good example of a particular market somewhere in West Africa where we've had a state pension fund exist for about 50 years. The total assets was just around, let's say, 12 billion. Now, that country decided to add on private pensions. Over a 7-year period, the same pensions fund had grown by 9 billion. So you realize that the difference was just about 3 billion. Now, projections are that in the next 5-10 years, the private pensions are going to overtake the state-run pensions. Right, because with the private pensions, the sort of investments are a little bit more aggressive, there's more accountability, there's more transparency, and that helps the funds to grow. Because the whole idea is to ensure that private pensions are solving two problems: socioeconomic problems. It's solving problems of infrastructure for governments. It's solving problems with funding for governments. And it's also solving problems of making sure that workers in Africa retire decently and are able to afford a decent lifestyles. If you look across, you have our colleagues who live in Europe coming over to Africa in their golden years, coming to enjoy and things like that. But you have people work hard in Africa, go on retirement, and they just have to go to their villages, and most of them die just about 6 or 5 years after retiring, just because of old age poverty. So pensions is key. It's solving two problems for the individual workers. Life is going to get better for them because they were able to have a lot of substantial savings, and for our government and for our financial sector, because there's a lot of money that allows government to do a lot of borrowing locally to develop our various countries.
Now, we need to put into context that we have a poor savings culture across the African continent. Of course, we're talking about government pensions and private pensions that are pretty picking up, not just in West Africa, but also in the East African region. Considering that you also just moved into the East African market, help me understand what the difference is, especially in terms of investments. One of the key things that have always been raised with the government pensions is, citizens being part of the investment choices.
Okay, good. So I mentioned earlier that with private pensions, there's more transparency. Now, the thing with the government pensions, or what we call the state-run pensions, it falls in a category known as defined benefit schemes, which are run more or less like insurance schemes. But in terms of investments, individual members don't have a say. You don't have you can't determine where your money should go. But in terms of private pensions, you could have things like employer-sponsored schemes, where you have a board of trustees that represents the members on the scheme. So with that, and such private pensions are bounded by things like trust deeds, investment policies, and things like that. So that gives you a broader perspective. So of course, the trustees come across, members of the scheme. So you have a clear idea as to where your monies are going to. And there's clear accountability. There are things like quarterly reports and things that are brought on board. Of course, private pensions can't just exist in a vacuum. Of course, there will have to be regulations, there has to be law. So those are very key things. So what happens basically is that the managers of private pensions work within the law, but they do their best to make sure that, with the investment guidelines given by the law, they are able to, maximize things like that. So yes, it's not as easy as saying that, yes, individual members are going to decide where exactly the money goes to. but they definitely have an idea as to where the monies are going to. The other thing with private pensions is that there's a lot of competition because it's not one entity does not have a monopoly over it. So you have an economy, you could have about 10 or 20 players, and everyone is competing to get your pension. So definitely, and you have the right to move to any pension service provider of your choice. With statutory pensions, you are stuck with one body, and so you don't really have a say as to where your funds are.
So you're talking about employer benefits, but we're looking at a 70% population of the informal sector. One of the things, the conversation has always been on how to financially include these people. Help me understand how private pensions are bridging this gap, or addressing especially the needs of the informal sector. Yeah.
So clearly, what comes to mind is what we call personal pension schemes and then micro pensions. So of course, with state pensions, if you don't find yourself in the formal sector, then technically you don't have any form of pensions. But with private pensions, service providers, as I said, there's a lot of competition. So service providers are doing whatever it takes to reach out to everyone. So fortunately, we have mobile money on platforms available now. So individuals, even no matter who you are, you can be a farmer, you could be a driver, wherever you work. You don't need to be working in the formal sector. You could there are products available these days. You could walk to any service provider, and service providers are also doing a lot of work trying to reach out to people. Of course, it's not as easy as that. It's very expensive trying to reach out to the informal sector because there's too much data on that sector. However, with technology these days, life is getting relatively easier to bring all this everyone on board. So private pension is definitely the way to make sure that all are